Hello, traders. Greg here. So we had follow through to yesterday's big down bar. And one point of view, that's a good thing. As prices accelerate to the downside, they reach areas of significant support sooner, and they create voids up above. That being said, it was kind of crazy, the price action to have that nasty down bar gapping above it and then follow through back to the downside. Historically, something like that doesn't happen too often, but here it is. It obviously happened. And so looking at the semiconductors, which led the way down, the 200 MA is most likely calling. That seems like an obvious spot for it to head into, and you always look to the left to see if it's lined up with an area of support. So this, if it follows through, that means there's obviously more downside. And looking at the volatility index, just looking for my areas at the top, up 38% today. That 30 level, trying to scroll this back, give me a second. You can see we talked about this pre-market, but that 30 level, a little bit above it is where this topped out, and as it went down, markets went up. So you'll want to keep that as a reference point, set an alert up there, see if it triggers, to be aware of that. And just things backing and filling here. Let's take a look at the broader markets. So the Qs, NASDAQ 100, are sitting right on that pivot. What's a pivot? It's a bar with three higher lows to the left and right. And that created an area of support when that dipped down, became a bottoming tail bar and three bars up. So it's stalled there for now. Looking at on the 5-minute chart, we see prices are still above the opening price. They're below yesterday's close. The red candle, below both of those, you can have a red candle on the daily, and I can see that on the 5-minute chart. You can see it formed a pivot here. It formed a pivot there. Under that, creating a significant resistance area related to intraday time frame, my intraday time frame, the 5-minute. And with a lower high, it looks like it's going to go lower. And if that's the case, maybe it goes below the low of the day, and the VIX will go up to that area. So we'll keep an eye on that. S&Ps so far held the 5,300 strike, which I mentioned pre-market, and the biggest not the biggest open interest. It's had the biggest volume today at that strike, expiring today. Many times the strike with the biggest volume is where prices will go, and when they get there, it'll provide an area of support. So again, the 5-minute chart here looks like it's rolling over. It might hit 5,300, and a lot of times it'll poke underneath it a bit and then flip right back up again. So from a day trading point of view, that's something I'm keeping an eye on to see if that happens. Right now, this looks like it's going to roll over. You could use one of the leveraged ETFs or the futures to take advantage of that. And let's take a look at this. I wanted to point out how things change. So typically, when interest rates are going up, it puts pressure on the market. And you can see here where it was flat, the markets were still able to rise. And then as interest rates went up, markets came down, and then as they started to roll over, you had that rally. However, now interest rates are going down and collapsing, and the markets are going down. And you might ask why, if historically they have an inverse relationship, because now the markets are anticipating a hard landing, a recession. That won't be good. And maybe they're looking to force the Fed to lower those interest rates now. And I mentioned in the green room, keep that in mind, because in my trading career many years ago, I remember them coming out in the middle of the day. It wasn't a Fed meeting, and they lowered interest rates, and the markets ripped higher. And I believe that's what would happen this time as well, since the markets have been moving down. They may not do that before next week, and probably wouldn't if that's in the cards, and that could lead to the S&Ps moving lower down toward 5,200 next week. So far, they're holding 5,300. They're I think they'll hold that today, give or take. But next week we could see, some people call it a Black Monday. I suppose that's certainly within the realm of possibilities, and it may move down to the next level that you're going to want to keep an eye on. So keep that in mind. Uh, the Dow was leading the way up. Now it's coming down. Some things that are doing poorly today, as far as the S&P 500, ETFs, consumer discretionary, and another measure in alignment with interest rates dropping that the consumer is going to back off, and they've already backed off. It's just the numbers are beginning to confirm what I've known for a while, just in things that I've observed, and probably yourselves experiencing the Bidenomics and the inflation. And so it is what it is for now. What's doing poorly? Amazon. They had their earnings, and it could be another measure of the consumer backing off. That gap down, it's severely damaged. Bookings gapping down, just looking at stocks within that consumer discretionary. Cruise lines, just looking at another cruise line, different stocks within there that are experiencing bad days and bad weeks and a bad month. Lulu looks like it's had a bad year, clearly, and it looks like it's definitely going lower. We already looked, technology is on its 200 MA. Our internals are getting close to a bullish extreme. I suspect we're not going to get that until next week, and then we begin to see how things start to come together for a tradable bounce. As always, if you have questions, email myself, Greg at Master Trader, and Dan, and have a wonderful weekend.